But I do think that parallels are very, very powerful in dictating price action where it's going to find support and resistance. So just an interesting thing how this line, again, parallel to here, which is this one parallel there to there. And then again, if you match it up with the next significant pivot area here, you get kind of that same area. So yeah, so it's just a huge options expiration. You get multiple, I mean, like it says, triple witching, multiple options expirations in different asset classes. So essentially what you have to look for is weird moves on these type of Fridays, and even the week can be very weird. And then you throw in, we did see weird moves this week, wild swings in the market. After the Federal Reserve announcement, we saw the big pop, then yesterday the big drop, and then the futures are up this morning going into the day. So it's really jockeying for position, getting options or underlying contracts to be kind of at levels where institutions want them to be going into expiration. But the bottom line is, for investors, focus on the bigger macro, I think the bigger chart picture, and look to next week already. One of the things I was speculating on yesterday was that potentially Bitcoin maybe pierces 20,000, goes to 19.5, 19.2, 19.1, and then you could actually get a decent bounce there as well. And my thesis for that was actually based on the fact that if you look at the 10-year yield, right? Let's go to the 10-year yield. You actually have a weekly potential topping tail. So this is the 10-year yield chart, right? And I do follow the 10-year yield because we know the bond market is massive, even compared to the stock market, it's way, way bigger. And you have to look at this. So you have this trend line that we just tagged this week at 3.5%. And you also have a topping tail on the weekly chart. So topping tails are bearish reversal signals. And again, when it occurs at a short-term high, and honestly, you have to go back quite a ways. I mean, you probably have to go back to here, which is 2011, to see the last time we were above this level on the 10-year. So that's a bearish signal. And we know if yields come in, it usually encourages risk taking because people are making less money in the bond market on interest. And therefore, again, it could be a reason why Bitcoin could get a bounce in this range, this 1920 range. And then also the DXY. Take a look at the DXY chart. There's this weekly channel, and look at where we are on the DXY. And also, again, I don't know if we'll sell today, but you could potentially have a doji here or maybe even a topping tail. Again, I am looking at Bitcoin, and I do think that there is a chance that maybe it still has to pierce 20,000 because there's a lot of stops there. You have to run those stops and kind of get rid of those people, even though, it's just psychological at this point. But it wouldn't shock me to see a bounce back to 30 after we get to this 20-ish, which we kissed already, or maybe 19-ish area. It'll be shorter this time. What we usually see psychologically from market participants is that once they've been fooled once, they'll see the bounce. Maybe some will jump on, but not as many. And therefore, when it rolls over, there just aren't as many buyers to support it. So I think you're right on that, is that you could see a month, but unlikely it'll be the same length of time as the last one. And what we know about markets, and this is just something from studying charts, is that markets tend to like threes, right? So 3-bar surges before a chart pauses, things like that. And so what you can see here on the chart of Bitcoin is this was your initial move down. This is your secondary move down, right? And then maybe again, we get that sideways like this, and then you get your final flush out, whether it's to my 12,000 target, maybe it goes below, I'm not sure. But I'm relatively confident that we'll at least go below 20,000. How much lower? I think, again, 12,000 could be it. But we would get that 3, 1, 2, kind of 3. And the final third is really the one where people throw up their hands. So there's lots of kind of things that are congruent at the 12,000 level. The first one is the measured move, this distance to this distance. If you map that same distance from here down, it gives you 12,000. So that would be that measured move. And then there are a few other things, right? 80 to 85 per correction in Bitcoin historically in its last cycles where it's past bear markets. That puts you right around 12,000 as well. And then also, there's even some other things like this pivot right here, right at 12,000. And you can see this one was where we bottomed out in 2019. We had a first move up, pulled back, then it hit again and finally broke out. So that tells you there's a technical level there as well, not just a measured move, not just the 80, 85% correction. And then even to take it one step further here, and this is just, I love just playing around with charts, right? So one of the things that I like to do is what I call parallels. And basically, it's just finding a parallel line with another level that matches up. So one of the things here, if we go to parallels, you can see that you draw this line through here, which again, if you extend it down, this has been the line that right here, see these lows, and this is what we just broke recently, right? So,
Yeah.
so you have pivot low here, 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 and here, and then we finally broke it. We'll extend that out more. Let's do an extension out even more. What about with these lows, right? But I do think that parallels are very, very powerful in dictating price action where it's going to find support and resistance. So just an interesting thing how this line, again, parallel to here, which is this one parallel there to there. And then again, if you match it up with the next significant pivot area here, you get kind of that same area. So right there. So again, that's the power of parallels. And again, I've started to use these in my trading more and more because I'm finding that they're more and more powerful. They really, and it's amazing because, this line is parallel with this midpoint here, which is parallel with here. And then and in all fairness, I would almost guarantee that at some point in the future, when we rally, you'll have resistance. If you connect here to this parallel, it'll be like resistance up here, wherever that line is at that point. So just very cool stuff with parallels in terms of trading. They always say that every generation has to experience something like that, and it makes a lot of sense. It's kind of like a reset for every generation, and a lot of those people that were in the Great Depression, there's not a lot of them left, unfortunately, to kind of remind us of the pitfalls. I still remember vividly my grandmother. They were relatively wealthy by the time they retired, but she still was into, so careful with money because she went through that period and remembered that period. And that's something just to kind of think about. And we all have to just be aware that this is a very dangerous time. It's not the time to be a cowboy and going all in on any one thing. You got to be careful. And you have to wonder, this is where it gets really interesting, at least for me, as I'm trying to value altcoins, right? So you look at like a Cardano or a Polkadot or a Solana or an Avalanche, and you have to say, okay, well, if this was a company, what would it be valued at in the stock market based on its use case, right? And this is so hard to do. But again, would it be a multi-billion-dollar company, or would it be 100 million? It's so hard to value these coins that again, that's one of the reasons why I'll trade the alts. But for the most part, man, when it comes to like where I'm going to accumulate for a longer term hold, I got to stick with Bitcoin as my main holding, and then maybe a little bit of Ethereum in there. But it's just too hard to know the real valuations here.